All right, looks like we're good. So market is now open, guys. Obviously you can see price kind of spiking around a bit. Yeah, it spiked down and it spiked up. But all right, so market is now open, guys. There's no entries up yet. It's just the breakout that's currently running. You guys can see a big spike up and down. Not as smooth as yesterday's open, but we'll see what happens here shortly. So, all right, guys, if you guys are just joining in, good morning, everybody. Today is Tuesday, January 6th. It is 6:30 right now. Market is now open. Before we get started, as you guys know, Cody Kite Capital is registered with the CFTC and a member of the NFA as a commodity trading advisor. Futures trading involves substantial risk and is not suitable for all investors. You can lose more than your initial investment. Past performance is not necessarily indicative of future results. This stream is for informational and educational purposes only. Nothing shown or discussed is a solicitation to buy or sell any futures contracts or to participate in any trading program. Um, I may hold positions in this market as discussed. My views may change at any time based on the market conditions. And if any hypothetical or backtested results appear during the stream, they have significant limitations and do not represent actual trading. So, all right, guys, there goes the disclaimer, and we are good to go. So we got the breakout here running. If you guys took the breakout, it is currently, yeah, it's going back and forth right now. So let's see. I mean, obviously I'm not in the breakout, but if you guys did take it, it is currently running right now, it looks like. It's going back and forth. Depending on where your entry was, I mean, might still be running, might have hit your stop. Big spike back and forth. Um, so let's see what we got here. All right. So yeah, we got price still going back and forth right now. If you guys have looked at the algo list, so we have two lists of algo trades for today. I posted the list for the 60/30 and I posted the list for the 40/20. Um, we have another against momentum coming up at 6:46. We have one 40/20 at 6:37. So there's a lot of entries listed for today if you guys have been looking. I mean, depending on how you take the breakout for today, some of you guys like to take the 50/50, some of you guys like taking, but the traditional way is people would take the 50/50, right? So the 50/50 just hit target right there if you did 50/50. If you guys are going for 100/100, I mean, everybody kind of applies it differently. The 100/100 is still running. If you're doing the 80/80, it's still currently running. But most people do the 50/50 if you're doing a one-to-one, and that has came up already right there. If you guys did a 40/30 or a 60/30, it's too tight. Like I would never recommend you guys do 60/30 or 40/20 for the breakout. I think the tightest thing that you could use would be a 40/80. Next one up would be a 50/50. So it just kind of depends on like how you guys would like to set it up. So Steven took the breakout right there. He made his 2000 and he's done for the day. Nice work, Steven. All right, we'll catch you here tomorrow. So for Steven, most of you guys know Steven, he's been here forever. The only entry he likes to take here is the breakout. So he took the breakout right there, and he hit his target for 2000 profit. So great work, Steven. We'll see you back here tomorrow. Again, if you guys want to take that trade, take this trade with caution, right? Or if you do take the breakout, make sure that this is like probably your only trade. Or if you do take multiple trades, make sure that you take very minimal risk. Because the breakout is very it's um it's very unpredictable, right? So here, I'll put the breakout up here just to show you guys the statistics right now for the breakout. Um, it's not a bad trade, but it's also not a great trade. So if I was to say if you were to take the breakout, it'd have to be like your only trade that you take because you have to put some size on this to really make profit on it to be profitable, long term. So if you took the breakout every single day for the past 20 days, you'd have a 65% win rate probability. Your profit factor would be 2.877, and then your total profit potential would have been 64%. This is by taking 2% risk for 4% gain. So max equity drawdown is 10%. Or actually, let's see. So 50 divided by 10 times 5 times 30. So 50,000 divided. Actually, this is 3%. So risking 3% to make 6% per trade. So basically, if you're risking 3% to make 60%, you'd have a 64% gain within the previous 20 trading days and a 10% max equity drawdown. So basically, this shows that it has about, or you can expect about three back-to-back losses in a sense. You can see over here from the equity chart, sometimes they'll have three back-to-back losses, but the wins outweigh the losses. So yeah, these are the statistics if you're taking um, the breakout every morning against momentum for the past 20 days. So we have an entry that's coming up right here at 637. This is going to be the 40-20. If anybody's looking to get into that one. Hey, Sam, morning. Yeah, so we got the 60-20 coming up in a few. It's for a buy position. So if you guys are looking to take this, this would be a buy coming up shortly. I still think the stops are a little too tight for the 40-20, so I'm not really looking to use the 40-20 just yet. I will probably move into the 40-20 a little later once, things get a little more consistent. So see who's here so far, or see who's here. Morning, Maria. Morning, Masij. Morning, Daniel. Morning, Mendez. Morning, everybody. Morning, Lila. All right, so the 637 trade is coming up shortly right here. If you guys are looking to get into this, this has a 9% max equity drawdown. Um, Here, I'll just share these entries with you guys because I'm not looking to really get into these here specifically, the 40-20s. So if you guys are new here, if you guys haven't been here for a while, the strategies haven't really changed. The only difference that we're doing here is we're trading everything based off probability and statistics, right? So like this is basically the momentum entry using the algo. So basically the breakout, but it's ran throughout the day. Um, and every minute it'll tell me the probabilities of the trade. So whatever minute mark has the highest probability, that's what I look to take, right? So we have an entry coming up right here at 637. This is at the 40-20 TP stop loss. This has a max equity drawdown of 9%, means that it loses nine times back to back sometimes. Not always, but sometimes that's the case. Here's the entry right here. It's currently running right now. So this one over here at 637, this has a max equity drawdown of 9%. It has a weighted probability of 50%, overall probability 50%, buy probability, sell probability 50%. It's all 50, right? So this doesn't really give us, I mean, it gives us there's probability of it winning, but it's just not very strong in a sense. Because it's just 50%, right? Typically, if I'm looking to get into an entry, I want it to be above 60. As a profit factor of 1.754, this means for every loss, there's 1.7 wins. And since we're doing a 1 to 2 risk reward, this is more of like about 4 wins, where for every loss that you have is about almost 4 wins, if you're counting it as R multiple. So yeah, this is the first entry right here for the 40-20. It currently came up. There's a lot of entries here for 40-20, right? And there's also a lot of big clusters. So if you look over here, there's a big cluster of trades basically from 720 up until 725, a 5-minute cluster over here where it shows that price continuously moves to the downside for a sell. So I'm not in this position right here. I just wanted to show you guys. Like I said, I don't really think the 40-20 is going to be too great right now because the ATR is too high. This means that, it can easily stop you out very quickly if it goes against you even just a little bit. We have an against momentum trade coming up at 646. That's going to be a reversal type move. And we'll go over here as follow through. So, but yeah, for those of you who haven't been here in a while, that's kind of what we're looking at now. We're not really, I mean, if you guys like the other strategies like the MPS V2, the good thing is that Masij here is helping us quantify basically all the strategies. So we'll try to create probabilities for everything else. Like for example, if you guys like applying the MPS V2, this shows the probabilities for the MPS V2 for the past year. It has a 41.67% probability of it winning. If you take every single trade for the past year, like this is pretty good, right? Because if you're doing a 1 to 2 risk reward, you just need to have above a 33%. So this shows for last year the MPS V2, if you took every entry, it would be profitable. Vice versa, if you were taking the breakout V3, same thing. Not as profitable, but still profitable there. All right, we got price pushing up. Full TP right there for the 637 entry. Let's see, question from Kip. So Kip is asking, you enter after the 637 candle? Yes, that is correct, Kip. So whatever time here is listed, the entry happens at the close of that candle. So this means that, so you can kind of see over here. I'll show you an example so you can just see from the actual chart. So this is that entry that we just talked about, right? The 637 entry. So see right here where it says the long position was entered at that blue line. So right here at 637, this means that at the close of that 637 candle, basically like as soon as it closes, you'd enter a market order or you put a limit order right there. The entry happened right here for a long position for 10 contracts, and then the exit happened right there where the target was hit. I know. Yeah, Daniel said haven't seen Kip in a long time. I know Kip's been busy. He's been a busy guy. But yeah, Kip. So after it would happen at the end of it. So like for example, if there's one here at 7 o'clock, at the 7 o'clock candle, you would enter at the close of it. So the close of the 7, the open of the 701. But yeah, I mean, as the volatility picks up and we have more consistency, we might shift back to the 40-20 because the 40-20 is a lot easier to get in and out of because it's a smaller target. The only thing that I'm concerned about is the smaller stop loss, right? When the stop loss is really tight like that, it worries me because if the ATR is high, like for example, right now the ATR is 36, we have a big candle like this, it can easily stop you out before you hit your target. So it can like stop you and then go up. So we'll see how the market moves. But we're not really stuck to one thing right now. Right? There's a pending momentum to the sell side now. Let's see, Masij says, Sean, did you manage to use the extension system or did you have some errors? I was gonna use it last night, but I just didn't have time. Honestly, I was away from the computer the entire day, and then I got to my computer like at like 10 or 11 p.m. And at that point, I was like, okay, I'm just gonna do it manually. But I wanted to use extension system. I just didn't have time yesterday. I know you said it was faster, but I just didn't have time to kind of figure out how to use it again. I know how to use it. It's just like I haven't used it in a long time. I think today I'll try to use it and I'll run different parameters. So I'll probably run for one for 60-30, one for 40-20, and then I'll have the list. And then from there, I'll deep dive into it to do the rolling sample. So I'll probably run it today. Okay, gotcha. So Masish said he found 50-25 to be better than 40-20. Okay, no, I'll look at that for sure. I'll definitely look at that. Masish said, okay, good. If you have any issues, yeah, I'll let you know. Thanks, Masish. I appreciate it. Let's see. Yeah, Kip said I've been here just using old faithful pivot strategies during clinic. Just change my schedule so I'll be able to be on more often. But I've got some catching up to do with the algo strats. Yeah, so the algo strats are basically very similar to like what you're already applying, Kip. It's just it does it by the minute. So you know how we apply the breakout? This would be a basic explanation of like how it works. So like how we take the breakout at 6:30 and like here I'll just put all the trades on here today because it doesn't matter. There's not a lot of people on the stream. It's not like really sharing this from too many people. But But Kip, you see it anyways on the Discord. But so here's an example. So 629 is a breakout entry, right? Um, there's either one direction or the other. It's either going to be against momentum or with momentum. So against momentum means that, for example, here, if there's an entry that comes up, like right now, we're coming up to 646. This is against momentum. This means that price tends to reverse at this point, right? So at 646, which is going to be the next candle, since we have a sell momentum here, if it's against, that means you're going to be looking for a buy as long as the probabilities here stay on the buy side. But basically, the way that this algo works is so the breakout happens at 6:30. It's just we're applying the breakout on every single minute instead of just 6:30. And then we have the probabilities of how often does it hit every single day at that specific minute marker. So just think breakout, but for every single minute. And for every single minute, we have all the probabilities here. The max equity drawdown, the weighted average, the overall average for buys, for sells, profit factor, etc. So it's a pretty simple concept. I'm sure you grasp it already. It's not that difficult to understand. Um, and that's basically how we've been trading. So same strategy. We're just looking for specific probabilities that are high enough that will allow us to trust in our position. So there's less guesswork here. The thing is when you apply the pivot scalp, you kind of have a bunch of pivot scalp entries. For this here, you're kind of like, okay, I'll take a pivot scalp, but um, I'll look for, whichever pivot scalp has the highest probability. So for example, over here, if you wanted to take a pivot scalp, um, if you had a buy signal which was coming up or which was flickering here at 646, that might be a good entry for you to take because it's indicating that buys tend to happen around this area or around this exact time for the past 20 days. All right, let me just set this up for the next. This is going to be the target entry here. So the next thing that we've been looking at here is I'm looking over here at the rolling basis. So right here is a sample of 20 trades, and then now I'm looking over here at this sample of 40 trades, and I'm looking at this sample of 60 trades. Since I see a consistency over here where the trade is profitable long term, this gives me the ability to trust that the next trade that's coming up is going to be likely a good trade. So this next trade over here, which is a target entry, for the 20 trade sample, it has a 6% max equity drawdown, meaning that it only loses about twice back to back before it wins. Um, and it goes on a win streak. It has a profitability and probability of 55% for both directions, buy or sell. Profit factor of 2.44, meaning that for every loss, there's 2.4 wins. Um, here on the 40 trade sample, has a 47% probability, profit factor of 1.8. And for a 60 trade sample, it has a 43% probability for a 1.4 profit factor. So if you guys have looked at this here, this is normal structure for a strategy. Strategies tend to decay over time. So within a 20 trade sample, it's a 2.4 profit factor, 1.8, and then 1.4. So it shows that long term, it does have strategy profitability. There's just phases over here where it kind of slows down a bit and then it picks back up and it slows down for a little bit and then it picks back up. So I'll be looking for possible entry right here. It's just going to take some time. All right, let's see. Yeah, Kip said, yeah, it makes sense. I've been looking at it toward my pivot scalps, but I misunderstood entry prior to or after time, which now makes sense. Yeah, definitely no problem, Kip. That's awesome. Yeah, so with that being the case, you don't have to be on the exact time. So just keep that in mind. If you're applying different strategies like the pivot scalp, NPSV2, etc., um, for a lot of these entries here, they would you just want to see like an area of like for example if you're looking for a pivot scalp right here at 649 you want to see that the algo is indicating that price is pushing up like there's like a cluster of trades pushing up from there so that you know exactly what's a good time or it's safe to enter. If you guys took the MPS V2 or MPS V3, I guess we talked about this yesterday. If you wanted to put a pending order right here, there's a buy signal price retrace. You could have had a pending order right here for a buy, and this would have been an entry right there for an MPS V3. We'll just call it a V3 because it's different. If you did an MPS V2, it would have been up there, right? If you entered at the close. I know MPS V2 has been one of the more popular strategies lately for Besiege and a couple other people. It's been hitting. So it's been pretty good and pretty smooth. So I'll try to I think I'll go down the strategy list and I'll try to give you like the set requirements message so you can probably quantify a couple other strategies. Um yeah, I'm trying to think what else. Well, I mean, all the strategies would be good to quantify to see if we can use it, but I think the main ones that we would want to look at, we already have the MPS V2, which we know is profitable. We have the breakout V3, which is we know is profitable. The other one would probably be like a V1 variation, so we could look for reversals. So for example, down here, this right here would be a V1 variation to set it for a buy. And I'll try to think of like other ones. I know Daniel gave me a criteria for the MPS V2 that I'll try to send over to you. I'm going to put it into more simple requirements so we can maybe have an option to add on to the MPS V2 for criteria. It's a lot of different things we can do. Nice. Yeah. Masish said he's going to do every single one. Yeah, I think I'll go down the strategy list and I'll probably just make very simple requirements. So the thing that we want with these back tests is we don't want it to be 100. Well, we of course we want it to be as accurate as possible, but we don't really care for it to be 100%, right? Like I was looking over here at the MPS V2. There's a couple the thing with Trading View and PineScript is that it's never going to be a 100% correct, right? I mean, even if you refresh PineScript, here, let me see. So if you refresh PineScript, it'll actually tell you down here that the back test is not going to be on 100% accurate. It doesn't say here, but usually it does. There's like a warning that comes up at the bottom because there's always going to be little glitches and little things that are just going to be overlooked or they're just not going to be counted and stuff like that. So it's good to just have an idea that the strategy is profitable. And then if it's profitable, then you can add the discretionary criteria and then you can like add your own things to it. Yeah, exactly, Message. Yeah, all the ones in the course. So I'll try to make a list of them, and then when I make a list of them, I'll try to confirm that there's nothing that's missing. I think there might be a couple strategies there that are not listed, or they might be hidden, but for the most part, I think a lot of them are listed here. See, there's a couple strategies that I think you can't that we wouldn't be able to turn into a script. Like I think. The liquidity push is a good strategy, but it wouldn't work because it's an active candle strategy. I think for all of our backtest strategies here, they have to be based off closed candle, right? I think that's the thing. Because we tried to do the market flow V2, but I realized that the market flow V2 couldn't be quantified because the way that it works is when price comes down, it fills while the candle is active. And with the backtest script, the candle has to close. So what I saw with the MPS V2 sometimes or the market flow V2 is that um, price would come down and then the entry would happen like up here because the script would wait for the candle to actually close. And I think that's one of the hurdles and the issues with the back testing is that it can't track positions that are active at the time. Let's see, Masih said I think levels in double body V1 would be good for the algo. Yeah, no, I agree 100%. I think, yeah, so those would be good. The levels would be good because the candle closes past the level, right? And we can use that as a closed candle. And then also with the double body, we can count that as a close as well. So I'm gonna run all of those by Masij and we're gonna get that going. I think the levels is gonna be really key. I think that would be a really good one to have the number. The problem with that though is that there are gonna be so many entries for the levels that it's gonna be a little skewed. So we'll have to add some filters and criteria to it because price crosses levels almost all the time, right? Like if I turn on the levels tool here, yeah, there'd be like a gajillion entries because it'd be like entry there, entry there, entry there. It would be kind of similar to the momentum. It would be similar to the momentum algo, like by the minute, but I'd have to turn on some filters so it doesn't count every single entry. But all right, guys, we have the entry coming up shortly. If we have a flickering momentum here, I'm not going to take the trade. So we currently have, we're 3 minutes out. So I'll be following the momentum over here. I'm hoping we don't get a flickering momentum. Actually, no, I realized it's for a sell. So the entry over here at 658 is actually, I don't think it's going to come up, because we have a buy signal here. So looking at the 658 entry, this is going to be with momentum as a 6% max equity drawdown, weighted probability of 54%, overall probability of 55%, buy probability of 53, sell probability of 57, and a profit factor of 2.44. So this on paper is a really good strategy. The problem with this here is that my direction's for a sell. You don't have to take it for a sell, but I like to take the direction that has a higher probability, right? The sells have a 57% probability, while the buys have a 54% probability. And if you look at the following candle here, it's even more spread out. So ideally for this specific trade, I'd be looking for a sell here. If you guys want to take it for a buy, feel free. You can still take the position. But like I mentioned, I take a bias here based on whichever direction has a higher probability. So looking at the trade analysis over here, um, so this trade over here, it's won 7 out of the previous 13 trades for buys, and it won 7 out of the previous 4 trades, or sorry, 4 out of the previous 7 trades for sell. And we have a sell signal which just came up right here, but this is just not going to meet my criteria because this would fall under flickering momentum. So yeah, unfortunately, there is no entry there for me. Yeah, if you guys want to take it, it's going to be a sell right here at 658. The problem with this is that one of the criteria that I added is there can't be a flickering momentum, meaning that there's no inconsistency with momentum within the previous 3 minutes of candle open. So because our entry right here is at 658, the issue with me is that we had a momentum which came up here, which was 2 minutes prior, right? It was for our direction of trade, but it did happen within this period. So if you guys want to take this trade right here, this trade's going to come up shortly in about a minute. It meets criteria, but it is a flickering momentum. So what I'm going to do here is I'm actually going to update the spreadsheet as we go. So this here was a win. This here was win, loss. No entry for both of these. So I'll be updating the spreadsheet as we go. Yeah, you guys can see the inconsistency with the candle movement here, right? The reason why we have that rule there for the flickering momentum is because we don't want to trade when price is chopping up, right? That's exactly what's happening right here. Price is chopping up. So technically the short position would have filled right here. Again, I'm not in this position because like I mentioned earlier, if there's a flickering momentum, I don't get into it. There's also a flickering momentum here for the 659. So I'm going down the list of trades over here. We're pretty much almost done with the 630 entries. The next entry, which is going to come up, is going to be over here at 4020 at 7 o'clock. So the reason why you don't want to take a trade when price is chopping up like this is because these strategies are based off momentum, right? So if there's no momentum in one direction, there's just no trade. And in order to prevent ourselves from getting caught in these no momentum type trades, we've identified and we've started to use flickering momentum as one of the key criteria to avoid a specific trade. Okay, so that we're pretty much done with these right here. The next entry is coming up at 7 o'clock for a 40-20. Not getting into that one, but I'll mark it up for you guys. Actually, I'm going to mark up the 702. The 702 is an actual target entry for that. Um, okay, so this is the unicorn entry that we talked about yesterday. This entry over here is typically a good one. The problem with this specific entry is that we used to apply the strategy before when we first applied the algo, and it was good, but then there was a lot of phases where it wasn't good. But you guys can see this entry over here at 702. This has really good numbers on paper. So looking at the numbers for the 702 entry, okay, so there's going to be a no entry here actually. The entry's at 702 and the buy signal hasn't came up yet. It's currently 7 o'clock, so this is going to be a no entry at 702. The 7 o'clock one came up right there. Obviously not another no entry. Okay. So this is the problem about having too many entries. We have a lot of entries here listing, and we have to be very on point with following it. The 702 entry right here, this is not going to be an entry because we have a flickering momentum, just like I mentioned earlier, right? So see how there's momentum coming up? It's flickering, right? It's coming up right there, but it hasn't closed yet. So this shows that the buys here, they're trying to push price up, but they're just not in power yet to push price through. And because this entry is coming up at 702 within a minute, there's just no entry there for the 702. But looking at the specific entry, let me just run down the numbers for you real quick. So this entry here is really good compared to anything else we've actually ever seen. So this has a 70% probability of it winning for either direction, buy or sell. Has a profit factor of 5.6. This is huge, right? Because this shows that for every loss, there's 5.6 wins. And if you're doing a 1 to 2 risk to reward, for every loss, there's actually 10 wins. That's huge, right? So this is an entry or a strategy that I would take very high bets on. The max equity drawdown is 3%. This is for a 20 trade sample. If you jump from the 20 trade sample to the 40 trade sample, you can see here that it's still profitable 55% of the trades. And the profit factor is still 2.239. So this is a big sample. This is almost 2 months or 3 months of trading, and it's very profitable still. Now we go down to the 60%. This is where the numbers actually are very shocking because usually it goes weaker, right? So it starts strong and then it gets weaker to the 40, gets weaker to the 60. Over here, it actually gets stronger to the 60 sample trade. So within 4 or 5 months, this specific entry at 702 has a 61.67 probability of it winning for either direction, buy or sell. And it has a profit factor of 2.7. So if you took this trade every single day for 60 days straight, you would win 2.7 times for every loss. Or if you were to do this in with regard to our multiple, you'd be basically for every loss, you'd have 5 wins. And you can see over here from the equity chart, it's true, right? You have one loss right here, then you have a bunch of wins. You have one loss here, a bunch of wins. You have like maybe two losses right here, you have like 10 wins. So yeah, unfortunately, the entry didn't come up for this specific trade. We were looking for a buy there. Um, and there just wasn't a buy signal in place. So, all right, we are done with that one. Now let's go over to 720. I was hoping we'd have an entry today, but I mean, it's not looking like we're going to get one. So these entries over here at 720, these are starting to get a little weaker. Actually, let's go to the 716 because that's the one that's going to come up next. So the 716 entry right here, it's not the best entry, but it still meets criteria. That's why it's not highlighted in green because it's good for now, but it's not one of those strategies that has consistency long term. And I'll show you why. Looking at the numbers here again. Okay, so the 716 entry is the next entry coming up that is supposed to be a target entry. looking, and again, like I said, the buys here are trying to be in control, but they're not able to hold it, right? So you have buy signals that are coming up here every couple minutes, like 7:04, 7:03, 7:01, 7:02, 7 o'clock, 7:59. Basically, for the past 7 minutes, this buy signal has been pending. So see how it's trying to push up, but every time it pushes up, it pushes price right back down, showing that the buyers here are trying to be in control, but they're not winning the fight yet. But anyways, looking at the 716 entry, so for this here, this meets the standard criteria. The standard criteria is that it has a max equity drawdown of less than 10%, meaning that it loses less than 4% or four trades back to back. The profitability over here has to be above 50% standard, and the profit factor has to be above 2. So the numbers here line up for it to be a target entry, standard target entry. Now looking over here at the 40 trade sample, this is where it starts to deteriorate a lot, right? Because it shows that within the 20 trade sample, basically for the previous 20 trades, it looks great. But if you look at the previous 40 trades, it's actually not consistent. It went for a really long losing streak right here. So for this here, it has a 37% probability, which is like not horrible, but it's not good, right? Anything above 33% is profitable, but anything below it is not. So this is really close. And if you're to factor in slippage and possible mistakes and stuff like that, spread, cost of commission, stuff like that, this will actually drop down to closer to 35, which is not very good. Now, if we go down to the 60 trade sample, this right here, again, it doesn't show very good numbers, right? Because you want this to show that it's a strong position long term, like it's a consistent position that typically wins. This here you can see from the 40 and the 60, it's not that great. It goes from 37 to 35. You'd want to keep these above 40 across the board, or even closer to above 35. And you want the profit factor to be closer to 1.5. So if you look at the equity chart over here, there's just periods of time where this strategy just doesn't work. Right now it's working temporarily, but we don't know for how long. That's why the 716 entry here is one of those that I don't really like for the most part, based on the history. But the numbers do look good for now within the 20 trade sample. All right, so let's see. Yeah, Nick said lots of pressure on both sides, it seems. Yeah, I agree. It is tricky. You have the buy signal there finally close. We'll see if the buyers here can hold. Oh, thanks, Masij. Yeah, so Masij mentioned yeah, 5.2 for every dollar. So for every dollar, it's 5.2 gain. Gotcha. Yeah, if it accounts for the 2.1. Okay, no, that makes sense. Yeah, it's the gross profits divided by the gross losses. All right, so we have an MPSV2 which is setting up right here. If you're trying to apply it as an MPSV3, you can put your pending order right there at the high of that red candle. If you want to take it as a traditional MPSV2, you could wait for this candle here to close. What I've noticed and well, even for myself, when I apply the MPSV2, I typically would only apply it within the first, I would say like 30 minutes. Here, let's change the statistics over here. I'm kind of curious now to see. So, I actually wouldn't apply it till 8 o'clock. I would apply the MPSV2 only until like maybe the first hour or so. So instead of that, we do up until 9:30. Let's see how high the profitability goes up from there. So it's at 41%. Let's see how much it goes up from here. Actually goes down. Let me see what if we only go to 7 o'clock. It stays about the same. So if you were to trade the MPSV2 all from 6:30 to connection 6:30 to 10 o'clock, it would stay about the same. This is if you're just trading until 7, it'd be about 40%, 41% probability. And This is going to be for, it's the same thing. It doesn't really make a difference. But yeah, generally, if I'm applying the MPSV2, I try to get in before 7:30. The reason why I do that is because volatility starts to die down as we get closer to 7 o'clock. But yeah, there goes the MPSV2. So it's currently running in profit right now as we speak. The entry actually happened like right here. I mean, it just kind of depends on when you guys want to enter it, right? So if you guys wanted to enter right there, it would have happened right there. If you guys wanted to enter right here, it actually would have just gotten filled right there. If you would have entered right here, it would have filled right there. It just kind of depends on where you look to apply the MPSV to, but it's looking good. It's currently running. Um, Man, NinjaTrader is just disconnecting right now a lot. Let me take off a couple of accounts here. Guys, so just a reminder, we are transitioning to, or we have already transitioned to StoneX. So if you guys are a hedge fund client and you want to move over to StoneX, just check your email. I sent an email over the past week, and we are transitioning all of the hedge fund clients to StoneX. I'm just looking at the NinjaTrader accounts. It looks like some of you guys here already made the transfer. So I'm taking some of you guys off the NinjaTrader list and I'm moving you guys over to StoneX. All right, so let's see. The next entry to look for would be the 716. That's going to be the next one coming up. And then after that, we'll have the 720. But yeah, guys, again, if you guys want to move over to StoneX, just check your email. Or if you haven't gotten the email, just message me or email me, and then we'll get you onboarded onto StoneX. Um, yeah, as we start to transition over, I'll start taking people off NinjaTrader. There's a lot of big things that are going to improve from StoneX to or from NinjaTrader to StoneX. So a couple of things here. Here, I'll just put the problems. Problems with NinjaTrader. Slippage, right? This is huge. Slippage, execution times, lag, lag entries, lag exits, and connection issues. These are like a lot of issues that we keep running into with NinjaTrader, right? Slippage, execution times, lagged entries, lagged exits, connection issues. This is okay if you're just trading one account, right? Because one account gets screwed, whatever. That's part of the game, right? It's just you run into those issues. But for me, I'm trading like 70 accounts, right? So trading 70 accounts, this becomes an issue, right? Because some people are losing trades, some people are winning trades, some people are getting less profit, some people are making more profit. It becomes an issue. The biggest scare or biggest issue, I think, would be the connection issue. I think that's the biggest problem because what I'm more concerned about is if we enter a position, we get disconnected, and then you're stuck in the position, right? I have to go manually into your account on a different platform and close it out. So these are problems that we run into with NinjaTrader. They're more so growing problems. If you're just trading one account or if you're trading with prop firms, NinjaTrader is fine, right? Because you expect these problems to be an issue. But when you're trading for a hedge fund and you're trading for, real money, you don't want these problems to be the case. So these problems are getting fixed with StoneX. If you guys are not familiar with StoneX, StoneX is an institutional broker. Not anybody can sign up for it. So if you guys have been onboarded with StoneX, you guys have already gone through the onboarding process. You can't just go to the website and sign up for StoneX, right? If you wanted to sign up for StoneX, you'd have to be an institution. And the good thing for you as a hedge fund client is that I am an institution, right? I am a hedge fund trader. So for me, I have access to StoneX. StoneX is the biggest broker on the institutional side that is not a bank. So, you can, if you want to compare brokers to StoneX, you would compare it to like JP Morgan, you'd compare it to like these big banks, right? That are running these shops that have like basically institutional execution. So you don't have much slippage. Your execution times are on time. There's no lagged entries. And then one of the biggest things is there's no connection issues. If you guys have ever had a problem with NinjaTrader and you try to get in contact with them, you typically would have to talk to a bot. With StoneX, we have a dedicated account manager. So if there's anything that goes wrong or if we need any help with anything, we have a specific person to speak to, which will handle all the issues. So yeah, if you guys want to transition to StoneX, I highly recommend it. You guys don't have to. If you don't want to, it's completely fine. You can stay on NinjaTrader for now. You probably won't have as many issues as prior because pretty much everybody's moving over to StoneX. So you'll be one of the few accounts on NinjaTrader that I'll be executing. Um, but yeah, that's kind of what we're moving to and what we've have been moving to and what's going to be the future for us. So I'm no longer onboarding onto NinjaTrader. Everyone has to be on StoneX if you're a new client. The only problem with StoneX is that there's not really many problems. The only problem, which is going to be my problem, is that they're more expensive. So I'm front loading all of the expenses. Basically, if you're using StoneX, you have to use a certain amount of volume per month or per day or whatever it may be. Um, and you pay specific fees. So every time I onboard someone, basically I'm paying fees. The client's not going to have to pay any of those fees, but I'm going to be stomaching those fees for the most part. So you guys don't have to worry about that. It it's all for the better, of course, right? Because I want to have the best execution. I want to have the best entries. I want to have the best everything, specifically for the hedge fund clients. But anyways, guys, this trade over here just hit. This was the trade at 710, or this was the MPSV2. So if you were to apply the MPSV2, this one would have hit right there. There's no other entries here available at the moment. 716 is coming up right now. So this right here is coming up in a few moments. Let me see if there's no flickering momentum here. I'm not going to get into it. I'll just hold it. I'll follow it. I think the volatility here is a little low. And we'll see what we got here. Sam's asking, Sean, you took your first trade of the year? Not yet. I've been trying to take my trade, but there just hasn't been any entries. The volatility here right now is really low. So it's really hard for me to get into these positions, or not for me to get into, but for me to want to get into these positions. Basically, a lot of these entries which came up are just no entries. Here's a spreadsheet for this year so far. Yeah, basically everything here. These are all the entries for the year so far. So 650 or 758 was the entry on Friday, last Friday, January 2nd, first trading day. There's no entry for me. January 5th, there was no entry here. This is barely the third trading day of the year, so I'm not really too concerned. But yeah, there's just been a lot of no entries for us here so far. There's a 716 entry. This one's currently running, but you guys can see the volatility is very, very low right now, right? I don't like entering positions when the volatility is too low because I don't want to be stuck in this position for too long. So I'm following it here. This is the 716 entry. It's currently running in profit, but you guys can see this thing is not moving. The 20-point range right there. So as the volatility starts to die down and get lower, this is where we might have to shift to a 40-20. But again, going back to StoneX, guys, if you guys want the brochure, I have a brochure for StoneX if you guys want to see. I was going to open it. Where is it at? Yeah, if you guys want to see like what StoneX is about, if you guys want to know the details, if you guys want to talk to the account manager to ask questions, feel free to let me know. This is StoneX. Basically, they have offices all throughout the world. Um, So the services here, they're meant for commercial traders or institutional traders. Like I mentioned, you can't trade with StoneX if you're a retail trader, um, because the fees they just wouldn't make sense for a retail trader because I'm paying a lot to use StoneX. Um, and basically, if you guys are a hedge fund client, you guys get to reap the benefits of trading with an institutional broker. All right, so there's nothing here yet. We are still looking for something here to come up. You guys can see the market here is pretty flat, right? I would say it was a good decision to skip the 716 because it's so flat right now. Let's see how long this trade usually lasts for. So this trade, for it to win, it usually takes about 15 minutes. For it to lose, it usually takes about 10 minutes. So like I mentioned with the statistics here, we have the statistics for everything. We have the win rate probability, we have the average win to the average loss, we have the profit factor, we have the max equity drawdown, we have how many bars it typically takes for it to win or lose. Um, yeah, I mean, just in general, we have all of the statistics here, and it looks like it was a good decision that we skipped this trade because it looks like it's not looking so hot. So this is where my discretion comes into play. And I use my discretion to not take this entry for today and not have it listed as a target. And it looks like my discretion here did play in our favor because if we took this trade here, it would have lost, right? Is why it's important to have discretion, understand like when to skip and when not to take certain entries because the obvious. So, all right, I will put this here in the, so I'll put loss, but no entry, no trade. So, all right, I was able to skip a or avoid a loss there using my discretion, understanding that, okay, the market here is flat, does not really work out in my favor. Um, and now we move on to the next entry, which is over here at 720. So this one over here at 720, this is going to be a skipped entry for me as well, because like I mentioned, flickering momentum, right? We had this momentum signal, which came up at 720, and the entry right here is at 720. So this one's currently running right now. If it's one that you guys wanted to take, it's not one I would take because, like I mentioned before, if we don't have consistency of momentum, I'm just not going to get into the position. But the trade is running right there at 720. We'll follow it. But again, like I said, I'm not in this position. Um, we try to take my discretion out, but I think we have to keep it in because the discretion here is key to avoiding certain entries and or just bad entries in general. Huh. It's weird that this one here came up for a oh, it came up, yeah, because there was no sell signal before it. So this is actually a buy because the sell signal didn't come up before it. Let me just refresh this real quick. All right, let me see what we got here. Oh, nice. So I'm looking at the chat over here. Looks like CJ was in for that MPSV2 earlier, plus Paul, plus Daniel. Yeah, no, that trade did take a while for it to kind of play through. Question for Mendez is asking, can you show again the settings for MPSV2? Looks empty once I added it. Okay, so here's the thing. If you guys are using any of the tools that Masij introduced, any of the backtest scripts, here are the settings for the MPSV2. If it's showing up blank on your side, Mendez, make sure that right here where it says for the K2 pivots, it's going to say close. That's going to be the set settings. Go down here and turn on or have it set to K2 pivots. So right here, K2 level 1, go down to K2 pivots level 1, set that up, level 2, level 3, and level 4. Once you have that set up right there, it should populate. And then depending on what your TP stop loss is, this is going to be on by default. It's going to be set to ATR. If you want to have it set to a fixed TP stop loss, like right here, 4020, um, you can do that. So you can do that there. Here, let's see what's stronger. Is it 4020 or is it 6030? I'm just curious. So right now it's at 41%. Or I'm going to look at profit factor. This is going to be the main thing. So 1.28. Let's see if this is higher. If it's higher, then obviously stick to 6030. No, it's actually less, a little bit less. Um, let's see, 2550. So 1.28 was for 4020. No. Okay, so looking at this here, it looks like 4020 is probably gonna be the best option. So 1.25 is gonna be 1.28. Yeah. 40/20 works best. The cool thing with this tool that Masij has created is that it tells you or it gives you the state of like what you're waiting for, right? So for example, here, if you're looking for a buy for an MPSV2, basically you'd be waiting for confirmation, right? So you had a buy signal here, you're waiting for the retracement is confirmed. Now you're looking for it to confirm a close past this area. So this is a cool tool if you're just waiting for the entry to come up. You just wait and you see you can expect what's to happen next. So if this candle closes above here, this is going to be an MPSV2. Anyways, back to the chart over here. So the 720 entry, it was for a sell, but if you wanted to take it for a buy, it looks like it just won right there for 40 points. So I will continue to follow this here. And if, obviously if these start to play out pretty nicely, we might shift back to a 40/20. These are both for sells though, so they're just no entries. Here, I'm gonna go and update the spreadsheet as we go. 716. I think this was a loss, right? Let me just go back over here real quick. 716 was a buy. Yeah, that was a loss. So I'm still documenting the trades even though I'm not taking them. All the listed trades, I'm marking them up as we go. 7 o'clock. This was with momentum for a sell. $702 with momentum for a buy. 712 with momentum for a buy. So the reason why I'm doing this and I'm documenting the trades on basically everything that comes up is this is going to tell us whether we should shift to a 40/20 or not, right? If there's a lot of losses here on the 40/20, then there's no point in shifting. We should just stick to what we're doing right now currently. Um, they're not going to be ones that we typically look to. I'm just going to count that as a loss too. We're not going to focus on the listed trades, but I just want to have them there for documentation purposes. So this over here was a sell. 720. Yeah, so I'm looking over here at the list, and you guys will see the spreadsheet is going to be updated as we go. I don't think the market's ready for a 40/20 shift yet, or we're not ready for a 40/20 shift yet, because a lot of these trades here are becoming losses. For me, I typically like to go with the trend, so it's not really going to make a big difference for me here. 23. Shift this over. I mean, this one's technically still running. Not looking so hot. All right, so I've updated the spreadsheet. Oh, and this is what I was going to show you guys earlier. So see down here at the bottom, it says caution. This strategy may look ahead bias, which can lead to unrealistic profitable results. So like looking at this, depending on what your settings are set to, it can be skewed. But yeah, I just updated the spreadsheet here. So if you guys have access to the algo, I'm not taking all these trades, but you guys can see this is why the 60/30 is still superior, right? Because we're having less trades, but we're also not having losses. So you want less. Less is more because you want something with less, but you have more trades and more profits, etc. Um, so if you're just applying the 60/30, you can see that you're applying the 60/30 for this year and then for this month so far, it's still in profit. We had a win yesterday on the 5th, which gave us a 2R multiple. And then for over here, we had a loss today, which is a -1. So we're still +1 for the year so far. If you look over here at the 40/20, there's so many trades here. And this is where it becomes a problem because if you have losses, they start to stack up on each other, right? So more is not always better. You want to have less trades, but higher quality entries. So, all right, this was the next one, which was I think this was 723. I'm gonna update that over there as well. Yeah, a lot of bad trades here for the 40/20 specific thing. So I think what I'm gonna do is I'm just gonna stick to my 60/30, guys. I think my 60/30 is is gonna be ideal. I mean, I'd rather have less trades and just no losses rather than have more trades, possibly more potential, but also possibly more losses. So I'll try to what I might do is I might just keep these separate. I think that's what I'm gonna do now, actually, because I don't want these to overlap. All right. Yeah, I don't want these to overlap because it doesn't look good when they overlap like that. It's a little bit confusing. So I'm just updating the spreadsheets right now. Okay. So, all right, let's see. We have the other entry right here. I'm just gonna keep documenting these as we go. 725. Yeah. The 40/20 they're not doing so great overall. Today's actually a huge losing streak for the 40/20, which I'm glad we didn't make that shift, right? I was thinking about maybe shifting back to 40/20, but it's not time yet. I think the volatility here is not as consistent for us to make that shift over. Okay, so I've made the adjustments over here. Okay, so I have basically two different spreadsheets over here with the 60/30 and the 40/20. So the 40/20 here, you can see it's not having a great day. But for the 60/30, there was only one trade today which came up, not one that I took. These are all the trades that we actually take. I haven't taken any trades yet so far, but these are the ones that are listed. So for the year so far, 60/30 is still superior because it's still profitable right now for the year. We had a win yesterday at 5, or we had a win yesterday on the 5th, and this was the same trade from today. So yesterday won, and then today's lost, of course. I'm going to update this. Why does it do that? Oh, I like have the actual dates on there. Okay. Yeah. So there's one more last entry which is coming up. It's going to be at 7:48. Well, there's one here at 7:40. This is going to be against momentum, and there's one over here at 7:48, which is also going to be. in that direction. Yeah, I'm glad we didn't shift over to the 40-20 because 40-20 would have been would have been a bloodbath today. So still no entries for me this year, guys. I'm okay with that. I'm perfectly fine. I'd rather have, like I said earlier, I'd rather have higher quality entries versus more entries. Um, I'm probably not going to focus too much on the 40-20 yet. I'll keep documenting them so that we can kind of see if they're starting to be more consistent or not. But for example, today they're just not because we're in such a choppy market in a sense. We had the big bullish push here until like about 7 o'clock and then it flattened out. This is why it becomes a problem where it flattens out because when it flattens out like this, it starts to have it starts to chop up and it ends up getting caught up in losses, of course. Because a lot of times it'll hit stop loss before it actually pushes down to the target. But yeah, we have two more entries coming up, 740 right here. And then we have the last one over here at 748. All right, let me check the chat real quick. Nice. So Paul over here grabbed the liquidity grab. Solid. Nice. Paul said he's halfway to his first payout target. Sweet. It'll come quick. You're gonna have a day where you just have a couple wins and it's just gonna come super quickly, Paul. So be ready for it. Yeah, Paul said if a high quality entry comes up, he's gonna take it. If not, he's calling it a day. Yeah, CJ said he had to change his entries from 60-30 to 40-20 because the ATR in the 10 minute is only 46. I'm surprised it's so low, right? For the 10 minute. I was expecting it to be a lot busier. Yeah. Rev said I personally think you should use your discretion all the time. Yeah, I mean the discretion is going to be one of the key things that we're going to be using, of course. I mean, my discretion was so with my discretion, guys, this discretion was used prior to today, right? I didn't think about this on the spot. I wasn't like, oh, I'm not going to take 716. You can see here it's not highlighted already because I already knew I was going to take that trade. Um, because the criteria is different, right? We're adjusting criteria as we go. For the most part, the criteria is mostly based off the rolling basis now. So if the rolling basis doesn't show that it's a consistent entry long term, I'm not going to take the trade, right? These over here show consistency. That's why they're in green, even though they don't meet the criteria for weighted average. The thing that I realized and I started to learn over time is that the win rate isn't super important, right? I think that's the key thing because we were putting too much emphasis on the win rate. The thing with the win rate is that even if it has a high win rate, the trade can still lose, right? So for example, over here, the 720 entry, the win rates were super high, 65%, 71%, 63%, 78%. Just because the win rates are super high doesn't guarantee the trade's going to win. So what you'd like to see, or what I'd like to see personally, is I like to see the consistency over a rolling basis of total trades, right? That's why I have my 20 trade sample, 40 trade sample, and 60 trade sample, because this will tell me, okay, is this strategy working just for now, or does it work long term? And what we want to take is we want to take an entry that works long term. So like I mentioned, the 716 entry, this wasn't based on my discretion for right now. It wasn't like, oh, I saw the market was choppy and I decided not to take the trade, right? No, that wasn't the case. Thing is, I already knew I wasn't going to take it the night before because I did the statistics on the rolling basis and it showed that it wasn't consistent long term. So I'll just put it up over here real quick. It showed that it was good for right now, but it showed over a 60 trade sample. It wasn't that great, right? So that's why that's why it's important to use the criteria to understand whether it's a target entry or not. So for these trades over here, these are just target entries based off the win rate. I didn't actually do a deep analysis on these 40-20s because I didn't plan on taking them, but I did do the deep analysis over here on the 60-30s because these are the ones that we actually look to take. Yeah, Masij said you should be looking for reasons not to take a trade. If you're looking for reasons to take it, you're doing it wrong because the reason to take it is our strategy already. Exactly. So like what Masij mentioned is the reason to take the trade is already set there because we have the probabilities, right, to take the trade. Now you're looking for holes in the probabilities here for not to take the trade. So like I mentioned, the numbers here look great for 716, but again, let's just put the numbers over here so that we can give another example of like why this is not good for it's already up here actually. So again, it looks good here for a 20 trade sample, but if you look at a 40 trade sample, so right now it has a 55% probability. If you look at the 40 trade sample, it drops down dramatically, right? It goes from 55% to 37%. The main thing to look out here would be the profit factor. It jumps from 2.426. Ideally, I'd like this to jump down to like maybe 1.8, 1.6. It actually drops down to 1.1. This is really bad. It shows that the consistency isn't there, right? And then you go down to the 60 trade sample, even worse. It's like barely profitable for a 60 trade sample. That's why I already put here that it's not going to be a target entry. So if you guys don't understand that, you guys will pick it up over time. It's just, we're always trying to refine our edge as much as possible when identifying target entries because we don't want to take bad entries, right? We're taking one, well, for me personally, I'm taking one entry per day, if not anything. And for that one entry that I take for the day, I want it to be good, right? I want it to be good to the point where if I lose the trade, I'm fine with losing the trade. But if I was to win the trade, I would be fine with that as well. Because I already did my homework and I did my research and I did my back testing and I understood that, okay, this here should hit for the most part, but I do understand that there's a possibility that it won't. So yeah. Let's see. Visual said, how many trades have you taken in the past few days? It looks like you're trading less and less because every trade has some issue for you not to take. It looks like a trust issue. Uh, no, it's not a trust issue. They just don't meet the criteria. I mean, there's no entry there because they don't meet the criteria for these. Um, yeah. I mean, there's no entry for these. It wasn't that I decided not to take it. It's just there was no entry there because the criteria is not met. We were trading these with momentum, and the momentum wasn't there. That's why we didn't take those trades. Same with the entry from yesterday, right? We didn't take any entries here because there's just no entry for that. And we would have avoided a loss, of course, because the obvious reason there was no entry there. Same with today, right? These are the entries from today. There was no entry at 658, 659 because it was with momentum for a sell, but the momentum over here was for a buy. So obviously we can take the trade there. The probabilities and the statistics show that the sells here have been winning for the past 20 trading days, but there just was no entry there. If you go back over here to 658, so 658 was um, yeah, it was right here. We had flickering momentum from this candle over here. That's why I didn't meet the criteria. So it's not that we're not trusting the entry, it's just that there was no entry there. That's the main reason why we didn't take it. But yeah, for this year so far, I haven't taken any trades. There's been no entries because the criteria just hasn't been met. These are very specific criteria that we're looking for. These strategies are based off momentum. Obviously, if the momentum's not there, there's not going to be an entry. That's why we have the alerts over here to identify where the momentum is flickering, right? So again, if you go down to 658, you can see over here that there was flickering momentum, 659, 7 o'clock, etc. This is 3 minutes before the entry. So it's not that we're not trusting, it's just there's no entry there. Let's see what else we got here. Elijah's asking, hey Sean, will you continue posting algo entries for both 60/30 and 40/20? So what I'll do is I will try to set up the um I'll post the 40/20, but I'm not going to do the against momentum because I can do the single direction and this won't take as long, or I might just use the Chrome extension to pull it up. So yeah, I think I'll continue posting it because we do want to see if the entries are starting to work, right? For 40/20. I still don't think the 40/20 is going to work very well because the ATR is still above 20. If the ATR drops lower and it stays below 20, then okay, the 40/20 would work great. But because it's jumping pretty high, so for example, here, see how the ATR right now is currently at 24? If you look at the ATR earlier this morning, the ATR was really high. So let's go over here real quick to replay it to like this candle. See, the ATR was close to 40. So what you want is you don't want to have a super tight stop loss if your ATR is too high, because if it even pulls back on you just a little bit, it can it can stop you out before it moves in your target. So I think the 40-20, it's just not time for the 40-20s yet, because of the obvious reasons. Volatility is still kind of unpredictable, especially what happened over the weekend. And it's probably going to continue to be that way. So I'd rather have it wider than tighter, at least for now. Masij said, Sean, I'll DM you, but if you could just give me the code. Yeah, yeah, we'll do that. Masij, message me after and we'll try to, I'll send that over to you so you can get it. All right, looks like you guys have some other chats over here. Yeah, Paul said 40-20 is a bad idea for January and February. Yeah, 40-20 is a lot better in the summer, like Paul mentioned. He said 40-20 would be better in the summer months when volatility is steady and not over 30. Yeah, it's too volatile right now. Exactly right, Layla. Um, yeah, so if you guys are wondering for that tutorial, I think I put it over here on the YouTube. Let me see if I could find it. Here, let me get the link for it. I did. Okay, here we go. I can share the link. Here, I'll post this under algo, guys. So, video explaining how to use the algo Chrome extension. Here, guys. Yeah. So this video explains how to use a Chrome extension. I need to rewatch it myself because I forgot how to use. Well, it's not that difficult, but I just didn't want to rewatch it. But yeah, Masij explained in that video how to use a Chrome extension for those of you who want to use it. Let's see. All right, so we're still following price here. Let's see, there was an against momentum trade which came up right here at 740. Okay, so this one over here is actually pretty spot on. So the 740 entry was right here. And so again, here's another example of the 60-30 trades running pretty nicely, right? We have the trade running right here in profit. This is going to be against momentum. Um, So looking at this, it has a max equity drawdown of 6.13, weighted average of 56.82, overall average of 40 or 50%, buys at 63, sells at 33, profit factor of 1.9 for a buy. So this right here, again, is another example of like why the 60-30 is still superior right now. There's less entries, but the entries do play out a lot nicer and they are more in the direction of the trade. Um, this trade right here at 748 is going to be a no entry. So I'm going to update the spreadsheet real quick. There we go. Oh, whoops, wrong one. This was a no entry. But okay, so with that being the case, let me go over here real quick and let's see what we are missing. Let's see, momentum. Kenny said use more improved data analyzation system with comp metrics, forward metrics, and back metrics. You're going a circle right now. This is what you because so many false. Uh, what do you mean, Kenny? I'm not sure what you're talking about. So Kenny said indicators are like magicians, show you good things for a little bit, then stop, do it again. Um, I don't understand what you're saying, Kenny, because these statistics are based off hard data. So the indicators aren't magicians or they're not tricking anybody. The statistics here are set on like what's on the chart. So there's no maybes here. This is all quantified. That's the whole point of having the quantified data, right? I think you're confused with like what the algo actually does. The algo gives us quantified data here. That's the whole point. It's we're not going in circles because we have the data in front of us. If you're basing it off technicals and you're just watching it on the screen, then yes, we're not looking at the screen. Like when you have the entries here, these are posted from the night before. There's no there's no thought process here done with the trades. It's just if the entry is there, then we take it. If it's not, then it's no entry. Yeah, I think you might be confused with like what we're doing here, Kenny, because these trades are posted from the night before. These aren't like stuff that we thought about the day of. Like we don't even care what's happening on the charts. Like this here would basically just be ignored for the most part. What we're looking for is we're just looking if the criteria is met, because all the criteria here is based off. Yeah, I think I think what you think we're doing is we're looking at like what's happening off the price action, right? We don't care what's happening off the price action. Like for example, here, this was against momentum for a buy, right? This position right here. So this trade was already established. All that we were looking for is if the setup was there. The setup was here because this was against momentum. So there's no, I mean, I don't know how to explain it to you any better. There's no there's no circle here. The numbers here show, so we have the data here. If I wanted to look at the data here for like, how far it's gone, we have the data here. This is all set. This isn't like, oh, one day it's going to be a win or one day it's going to be a loss based off whatever. We have the data here showing that for all the wins and for the losses here, um, the probabilities are already set, right? That's why we're basing everything off the probabilities. We're not basing it off anything that's happening on the chart. What's happened here has already happened. And that's how we have the probabilities of the specific entry. So yeah, everything that you mentioned, because you mentioned use an improved data analyzation system with comp. The metrics are already here. Everything that you asked for is already here. This is the improved data analyzation with comp metrics. The metrics are in front of us. We have all the metrics you mentioned. We have the forward metrics. We have the back metrics. We have everything that you mentioned. There's nothing here that you haven't already mentioned. We have all of the data here. If I want to go back farther in data, we could. Like for example, we have a 20 trade sample. If I want to go back to and I want to see the entire history of this specific strategy at this specific time, I have the data here, right? I can pull it to from December 31, 1799 up until today, January 6th, and it shows here that the strategy is still profitable at this specific time. I mean, maybe not this specific one, but if we use something so this is an entry that we consider to be a good one, right? 858. So let's update the report. That's going to be the one here that's listed in green. And you can see the report's updating. And yeah, there's gonna be periods where it's good and there's gonna be periods where it's bad. That's why for us we're using a rolling basis because we're only using it when it's good. When it's bad, we're not using it obviously because statistics don't show that it's good during that period. But when it's good, that's when you want to use it, right? This shows over a X amount of period, a total of 772 trading days. It has a profitability of 34.84. This is every single trade taken every single day with no statistics being avoided or ignored. Every trade, and it shows that it's still profitable. So if you traded at 658 every single day for years, it shows that it would still be profitable. In order for you to be profitable, you have to be above a 33%. So this is 34.84. This shows that it's still profitable over a long period of time. Kenny said, I'm a data analyst. Yeah, Masij is a data analyst as well, right? Yeah. I don't know what's your credentials again, Masish? Masish, yeah, I think yeah, Masish said if you want to compare degrees, I mean, Masish he has a master's in I think data engineering, right? Which same thing. Uh, yeah, so all the data here that we're using, and we're not trying to like compare or anything, right? We're just showing you that this stuff is like we're using we're using the data here for the, like we have a foundation for like our system here and what we're following. There's no there's no I mean I don't know. I don't even know. I don't even want to explain it. There's no comparing between like between um credibility and stuff. But yeah, we've looked here to like the data that we're using here is data that's actually supposed to be that we're looking at. We're not going in circles, we're improving. So every time we improve our criteria, we're always improving something a little better to make it uh to make it more favorable to like what we're looking for. But yeah, I mean it's okay, guys. Yeah. But we take your comments and your opinions uh to we take it in a good way. Just putting it that way. We're taking it in a good way. Like if you guys do have opinions or anything that you think should be improved with the algo, yes, we take recommendations and stuff like that. But I think just going back to what you were saying, Kenny, the stuff that you mentioned, we're already doing. Like all that stuff is included. It's just we're making small improvements along the way. So like for me, I used to base everything off the win ratio, but the win ratio is actually not that important, right? Now that we've kind of looked back on it, I think the main thing here to really focus on would be the profit factor. The profit factor would be like the key thing to look at. As much as I want to like kind of shift over like the momentum direction to make it more concrete, this is the only catalyst that we use for our criteria, right? There's just one criteria that's used for the algo. And that's something that we can't take out because that's the only thing that we're using. So yeah, anyways, uh anyways, let's see. Yeah, Masish said I'm glad the data showed us that the 60/30 is better with when we were taking too many losses before the chop. Yeah, I agree, Masij, 100%. Before we had a lot of entries. So, like, if you guys remember in October, we had like a month where there was like a ton of entries. And that was because we were applying the 40/20, which is, it's a good thing and it's a bad thing. It's a good thing because there's a lot of entries, but on a day like this could really destroy an account, right? If you were to take this many, I mean, this is a 5 hour loss for the day. If you took every single trade. If you took just the target entries, it would just be a 2 hour loss, which wouldn't be like that bad. But still, it'd still be a 2 hour, right? So I think what I'm going to do is I'm going to keep listing the entries here and I'm going to see if they balance out, right? If they balance out where you have like a 2 hour loss or a 1 hour loss or whatever it may be, if they balance out better long term, then obviously, the shift back to 40/20 could possibly be better. Just possibly. Anyways, let's see if there's anything else over here that I'm missing. Let's see. Island said, what prop firm do you guys use now? Um, so for me, or if you want to use today's like the last day for the promo. If you want to use Apex, there's a promo going on right now. It's 90% off. Let me put it over here real quick. Yeah, so the main one that people are using, I think Deswell, right? Islander, you're Deswell. I haven't seen you in a while, bro. Yeah, no, it's good to see you. But yeah, Deswell, if that is you or if it's not Deswell, most people are using Apex because it's the cheapest option. There's a couple other options that people want to use. Like if you want to use a straight to funded, you can use if you want to use other options, there's Tradeify, which is straight to funded, but they cost a lot more. So with Apex, you can open an account for like 20 bucks and you're good to go because it's 90% off. You have to use it today though. So just keep that in mind, guys. If you guys are looking to get more accounts with Apex, if you want to max out your accounts and get 20 accounts to start off the year and just, keep using it for the rest of the year, the 90% off, this is the biggest promo that they have and it's ending today. So just keep that in mind. I'll repost this again right here in the group. Um, their biggest sale is ending today, guys. So you'll have the ability to pass the account for the next 2 weeks, but if you want the 90% off, you have to get it today because it's expiring today. So I'm just gonna be posting this in the chat. Just so the reminder, if you guys don't want to, it's completely fine. You can wait for the next possible day. But for the most part, right now, this is gonna be the last day for the 90% off. Yeah, I figured it was you, Deswell. Yeah, no, Happy New Year's to you, bro. It's good to see you back here. Good to see you back here um, on the session. Yeah, no, I agree with you too, Masish. I just that's why a lot of times I try to ignore it, but then sometimes, I'm just like, okay, I have to address it because it just doesn't make sense. Um, but all right, guys, so there's no entries here. If you guys have any questions, I know there's a couple questions, so I'll keep going over the questions before I get off, but let's see what else we need to cover here before I get off of this. Um, let's see. So Kenny's asking, what if you have a ton of entries on lower time frame and a couple entries on higher time frame and they line up? I mean, that wouldn't happen because we're only using one time frame and there's only one entry per minute, Kenny. So yeah, I mean, I think all of your concerns are already kind of answering them yourself because that's why there's only a 20 trade sample because this is not 20 trades, it's 20 trading days. See, if you have a sample of, we have a sample of 5 years of data. So, I mean, if I forgot where I even put that thing. Where did I put that? I mean, I don't need to show you guys it, but yeah, we have an analysis here, deep analysis, right? We went back 5 years of data where it has all of the data here. So the thing is, I think you don't understand the strategy, Kenny. I think that's why you're confused, which is completely fine. It's okay that you don't understand it, but so we're trading on the 1 minute and it's a time-based strategy based off momentum. So every minute we have the probability. If I want to go by the minute, every single minute, I could pull up the probability for every single trade. There's not multiple trades per minute. It's just one trade per minute. So like this specific trade that we were looking for at 658, this is 658 every single day for the past 20 days. Um, and then if you wanted to go on the rolling basis, we can look at it for 40 days. So I think what you think is that there's like, okay, 60 trades in one day. That's not the case here. This is one trade per day, so 60 trading days total, which makes it about 5 months or 6 months of data, indicating that that's what the probability is. Because it's a once a trade per day type thing. It's not like multiple trades per day. For the other scripts that we have here for the MPSV2 and the other ones, then yes, these are multiple trades per day, but for the specific algo, this is once per day. Yeah, so like what Sam mentioned, yeah, higher probability is higher probability. It has nothing to do with higher time frame. Yeah, everything is set. Everything is set there. And here's Lena. It's time for me to get off this session, but let's see what we got here before we get off. So let's see. We will make it is asking, can you use prop firms for your hedge fund? No. So unfortunately for the hedge fund, it's cash accounts only. It's only cash accounts, so you'd have to have your own cash and capital to trade. We can't trade with prop firms, fortunately. Let me go down the chat real quick, make sure there's nothing that we're missing. Yeah, no, exactly. Lila, 100%. So we're gonna stick to what we're doing, of course, and we're not gonna make any changes. Whatever works, works, and we're gonna keep improving from there. Um, and yeah, no, I agree with you too, CJ. That's why I try to stay away from it, but I mean, it is what it is. It's there. As long as it doesn't get in the way of our trading, I think we'll be fine. Yeah, Sam. Baby's in the house, huh, baby girl? Yeah, once 8 o'clock hits, Alina knows it's time to get off this live session. But anyways, guys, let me show you guys the statistics for the year so far. So for the 60/80, I haven't taken one trade for this year so far, right? It's been a lot of no entries here because the entries just haven't lined up. But again, like we mentioned, this is quality over quantity. So for me, I prefer more that there's no entries here versus there being entries and there being bad. So for me so far, if we're looking at every listed entry that I put up with the algo, it's currently at a 1R for this week so far. We had a win yesterday, which was at 716, and then we had a loss today at 716. So it won yesterday for a 2R and it lost today for a 1R, with that being a total of a plus 1R for the week so far. For the year so far, there hasn't been any trades. So 0R for us for this year, which is completely fine. This is the third trading day of the year, so there's no rush. Um, and we'll continue to apply this and push forward as we continue on with this week. Obviously, we came back from a crazy weekend, so the market is kind of all over the place. Um, but I do see it improving over time, right? I think what happened in Venezuela is going to cause volatility in the market, not necessarily bad volatility, but once it starts to move a little more consistently, then we'll be able to really take advantage of the momentum swings of the market. But yeah, as of now, this is kind of what we have here. If there's any other question that you guys have, feel free to hit me up on Discord and Besiege. I'll talk to you shortly after um, to get you the pivots source to add it to your tool. Or I think, I mean, you don't really need to make the update. I think people understand how it's used. I think what I might need to do is I might just need to create a video explaining how to use it. Because I think it's actually better what you have now, Message. I think what we have now, we should leave it as is because I was thinking about it. If we want to use a different tool for identifying the trend, we could probably use a different tool. Because the pivots are like one tool to identify, but we also have like the trend meter and stuff like that. But again, that's just a thought. But okay, guys, if you guys have any questions, are you okay with me? All right, guys, I got to take Alina out to go play. But if you guys have any questions, feel free to hit me up. Otherwise, I will see you guys back here tomorrow for the next live session. So, all right, guys, catch you guys then. Have a great